Alright guys, in this video I'll discuss about RSI trading strategy and I'll show you how we use RSI to identify a better trade opportunity. In this video I'll discuss about basic understanding of RSI and divergence, how normal trader used RSI and trading strategy. I will show you RSI with counter trading strategy, RSI with trend continue trading strategy, and RSI divergence near key level. Basic understanding of RSI. RSI stands for Relative Strength Index and it's used for identifying overbought and oversold market. So now here you can see I'm using two levels, one is 70 and another is 30. When price stay above 70, it's called overbought zone. When price stay below 30, it's called oversold zone. Means when price stay below 30 means price is cheap. When price stay above 70 means price is high. RSI and divergence. What is divergence? When price is moving opposite direction of the RSI indicator called divergence, which can be used as an earlier indications of a possibility to change the trend. Type of divergence: wide divergence and close divergence. Now see here RSI and divergence. Right now here I can see price are creating higher high. This is a wide divergence. Price creating higher high and higher low. Have you seen it? Higher low, higher high, higher low, higher high and higher low, higher high, and now here you can see in RSI also creating higher high, higher low, higher high and higher low, and here you can see higher high and higher low. But in this area RSI not able to create new higher high, but price are creating higher high. Have you seen it? Price are creating higher high, but RSI fail to create a new higher high. When they form this type of pattern, it is called divergence. And when it's formed like that, it is a possibility to change the trend. Now here I can see trend is running in an uptrend, and from this area it is a possibility, or you can say probability, to change the trend toward downside. How normal trader use RSI? So basically a normal trader or amateur trader use three RSI level. One is 70 or 80, another 50 and another 30 or 20. Alright, so most of the new trader use. They use when price enter above 30 level. Now you can see price was running here below 30. When price enter above 30 level, so they place buy order. So if you do like that, you can see price drop from this area. And here you can see some people use when price enter, they enter in this area. So similarly, when price cross the 70 level from upper side, now you can see they was running in a overbought zone and they enter, they cross this 70 line. At that time they place sell order. So if you do like that, now you can see price are continue toward upside. So we have seen when we apply this type of RSI trading strategy, so there are many false signal are there. So in this video I'll show you exactly how we use a better entry point by using RSI indicator. Alright, first trading strategy, I'll show you RSI divergence near key level, because right now here you can see this is the perfect time here. So first here you can see I'm using RSI, and this is 7 period, RSI 7, remember RSI 7. Most of the manually it come 14, but I'm using 7. Alright, so remember. And right now here I can see this is the crude oil in H1 chart and price exactly near key level. That is why I'm using last trading strategy. So right now here I can see this is the key level. Why this is the key level? So we have seen price was rejecting from this area. Have you seen price hit, price gone up, pull back, hit this level and create a new high, again pull back to this level and bounce from this area. Have you seen it? Price are respecting again and again, and price drop to this level, and now here I can see this is the previous key level and bounce again, and right now exactly near at that level. Have you seen it? So that is why I'm gonna draw a horizontal line by connecting this swing point. Now I can see. So let me connect here. So and I connect. Have you seen it? Alright. Now let me remove this one. Now I can see I connected this rejection point. Have you seen? Hit and reverse back, hit and reverse back, hit and reverse back. Right now exactly near this key level. This is the key level. Now in this area we will focus on RSI divergence. Right now I'm using H1 chart. Have you seen it? This is the H1 chart I'm using. H1 chart. Now in H1 chart it's not showing divergence. Have you seen? Right now here I can see price are staying below 30. Now what we will do? Now let's just jump to small time like 15 minutes. Okay, now I can see 15 minutes what we have seen. In a 15 minute price are creating lower low, lower high, lower low, lower high and a lower low. But RSI, what they are forming, that was lower low, lower high, but next they are not able to create a lower low, they create a lower high. Have you seen it? Means right now RSI are indicating us that price are diverging. Alright, they are creating lower low, but RSI not able to create a lower low. Have you seen it? They are creating lower high. So what we will do? We will draw a diagonal line by connecting this point. Have you seen? They are creating lower low, but RSI are creating higher high. Means it is a probability to change the trend and it will continue toward upside. Now question is that can I go for buy now? My answer is no. Most of the time we have seen they are forming a fake signal. So that is why we need more confirmation. Now what is the more confirmation? So we will draw a diagonal line, previous swing point. Now see, I wanna connect most recent swing point. Have you seen? I just connected swing point. Have you seen? This is the swing point, this is the swing point, and this is the swing point. So I'm looking for a breakout. If price break this level, so I'm definitely I'll go for buy in this area. Next strategy, RSI with counter trading. Alright, RSI with counter trading strategy. Now let's jump to here. Okay, let me show you somewhere here. So this is also here I can see crude oil and 15-minute chart. Now here I can see price are running in an uptrend. Have you seen? Price are creating higher high, higher low, higher high and higher low. Now trend is up, so somewhere here. Alright, so we need a divergence. So in that case what we will do? Now here I can see this is the swing point. So now when we apply candlestick pattern, it is not visualized properly. Now what I'll do, let me show you line chart. Now I can see this is the line chart, and in this line chart what we have seen, price are creating a higher high and a higher low, but in the same time RSI are creating lower high. Have you seen it? Price are creating higher high and higher low and higher high. Have you seen? But RSI not able to create a higher high, and then next they form higher low. Now where is our entry point? So now let's jump to candle chart. Now this is the candle chart, and we will draw previous lower point. Have you seen it? So we need a breakout. So once price break this trend line, so we are looking for short. That is the counter trading strategy. So next we will show you RSI with trend continue trading strategy. Means trend is running an uptrend and giving a correction, and in this area we will use divergence and we will catch the market before price create a new high. So let me show you in a live chart. Now here you can see price are running an uptrend and they are creating higher high and higher low, higher high and higher low and higher high. So means trend is up. Now you can see in this area we have seen price are creating lower low, lower high, lower low, lower high and a lower low. But in the same time you can see RSI also creating lower low, lower high, lower low, lower high and a lower low, lower high and but in this area have you seen RSI failed to create a new lower low. But in this chart we have seen price are creating lower low, but RSI not able to create a lower low. Trend is uptrend, and in this area price are giving a correction, and right now we have seen a divergence. Now let's see here, let me draw. Have you seen? This is a closer divergence. Alright, we have seen two type of divergence. So one is wider, another closer. So once they form this type of divergence, so we are looking for buy, and I'll draw a trend line by connecting previous swing point. This is swing point, this is swing point, and this is swing point, and this is the breakout, and this is my buy opportunity. So exactly we have seen three most important trading strategy. Now let me show you another chart. So this is the crude oil and H1 chart. Let me show you, this is the key level. Have you seen it? We have seen multiple rejection. Price are rejecting again and again. Here you can see multiple rejection, rejection and rejection, rejection, and the price hit this level. But in this area we have seen both are creating higher high and higher low. This is the H1 chart. Remember, this is the H1 chart, and around 30.22 this is the key level. This is 30.22, this is the key level, because price are rejecting again and again. Now if you wanna see, both are creating higher high. Have you seen? Okay, now RSI also creating higher high. So let me draw like that, so then you comes to know properly how we identify. Have you seen? Both are creating higher high. Have you seen? Now what we do in this area. So now let's jump to small time frame. Now this is H1 chart. This is the H1 chart. In H1 chart, exactly near key level, both are creating higher high. Now let's jump to small time frame. How it should look like that. Okay, let me draw a vertical line by connecting this point. Have you seen? Okay, I connected. Now let's jump to 15 minutes. Now I'm going to click in 15 minutes. Okay, now see where is that area. Now in this area, have you seen? In this area it should look like different. Have you seen? They are creating higher high and a higher low, but RSI not able to create a higher high and higher low in a small time frame. All right, we are using we are identify this divergence by using time frame. Okay, let me show you another example. Now I can see this is crude oil and H4 chart, same chart. Now we have seen this is the rejection point, multiple rejection we have seen. Now here I can see in this area, have you seen in this area there are no divergence are forming like that. All right, but RSI is showing divergence. There are no price action is showing in this area in candlestick pattern, but that is why we use line chart. Now I can see line chart, they are creating lower low. Have you seen? Makes sense? Lower low, have you seen? Lower high and a lower low. Have you seen? Lower low. In the same time, you can see RSI is opposite. Make sense? RSI is opposite. They are not able to create lower low. That is a divergence. Okay, so I hope you enjoyed this video. If you like this video, please like and subscribe. Thanks for watching.